Hey, good morning, everybody. Thank you for joining me. Yes, I generally go live at 8:30, but I have such important information to share with you today in this video that I thought I'd make it the night before because today I'm going to provide you with lessons and exactly what I'm looking for in a trading day and what you should be looking for to help you make you money. Yes, I do this every morning at 8:30 and you're more than welcome to join me any morning, okay? But I want to talk about the SPY levels. I'm going to talk about what I'm seeing. Now, again, I'm here every day on YouTube. Does that make me the best trader? No, never claimed to be the best trader. I'm a successful trader. I still struggle with FOMO. I still struggle with entry points, holding my positions for my exit strategy. I still get greedy sometimes. I over lever myself, but I share this with you to hopefully help you avoid some of these mistakes, help you hold longer on good trades, hope you take the loss and exit out on trades that you're just wrong. Because sometimes we are just wrong. Okay, with that said, we're heading into Monday. So, what am I thinking? Actually, that's why I've got the SPY here. That's why I'm sharing with you. It doesn't mean I'm going to be right. I'm sharing my strategy going forward, what I'm seeing in the SPY. I've got the 1 hour chart. Okay. So we're going back, what, a number of weeks. We're going back to the end of May when the SPY was, what, 412 to 414 for like a week, 2, 3 straight, right? So yeah, we peaked at 442. Now, here's the thing. All right. Big tech, Meta, Amazon, Google, probably Apple as well, even Tesla, they're continuing to be bought up. Yes, liquidity is leaving the market, but the money that's staying in the market has been focused on big tech. So, what do I actually see happening? Well, that's why I've got the chart up. That's why I'm here to share. I actually think there's a good chance we head right back to that 442 range that we were at, and we might reject it, and we probably will reject it because it's awfully frothy. But as we sit here, and where are we sitting pre-market? Probably at 433. We had a down day towards Friday, towards the end of last week. Liquidity is supposedly leaving the market. However, big institutions are still buying technology. I have a feeling, again, my opinion only, we're going to 442. We're going to reject that. And maybe we'll have a red bearish July. And I'm a bear, but I'm here to help you understand trading. So when you're trading, it doesn't mean you have to be active every day. It doesn't mean you need to enter 1, 2, or 3 trades a day. Some days it's probably best to just watch the market. If you're confused about a position and you don't see the volume or the support and you're a bear and the market's bullish, it's okay to stay on the sidelines. Now, me, lately, I've been insisting that everybody start using the flows and algo room. All right. If you're part of our Discord, great. I'll show you exactly what that looks like. If you're not part of our Discord, then you should join someone else's Discord or some way that you can look at the flows or algorithms, or if you're a longer term investor. Speaking of being a longer term investor, a quick lesson again, okay? Let's know, say you like to trade options. I like to trade options, okay? You trade stocks, that's fine. You're getting into a stock, you're getting out, you're making 1, 2, 3%, maybe 5, maybe you're playing a meme stock and it's 20%. Whatever your strategy is, that fine, it works for you. Me, I trade options. Now, if you want to be extremely risky, you can use 0 days till expiration. But why put yourself in that much trouble? If you want to play the SPY, the SPX, you want to play the Qs, you want to play an individual stock like Tesla, Microsoft, you think they're going up or down, I don't care. What I'm telling you is give yourself an extra week to be right. If you're playing the Qs or the SPY, give yourself an extra week. All right. Don't play 0 days till expiration. Yeah, Matt, but how am I going to get that 900% return? You're not. If you're playing out 3 extra days, your return would probably be 150% versus 900%. But it's a lot safer because we know that we're in a volatile market. Okay, let's look what happened to Russia over the weekend. You had the chef, right, who turned mercenary, leader of a mercenary, the Wagner group, all right, turn on Putin because some of his troops got injured while fighting in Ukraine, and it's probably Putin's fault. What happened? A settlement was reached, but again, it was a very stressful 2 hours, I'm sure, for people in Moscow because you're talking about a civil war. What that would have done to our markets, I don't really know, and it doesn't really matter because as traders, we don't have emotion. So again, and I have 2 suggestions on what I'm thinking the market could do. Now, again, liquidity is leaving the market, but I talked about this weekend, fiction versus reality. So the reality is the market's definitely a little frothy right now. There are definitely stocks that shouldn't be where they are based on their earnings. The earnings of S&P companies are going down. The market's going higher. Interest rates are going higher. The gap in the yield curve is ridiculously large, right? We're headed to recession, but we're not. The workforce is still strong. Well, that means Feds have to raise rates. Yeah, they do. Probably 2 more times, probably in July. Well, should that push the market down? Yes, but there have been a lot of factors that should have pushed the market down. And what do we keep seeing? The market ripping higher. So how is that even possible? Easily. You have institutions, hedge funds, pension funds, mutual funds. They must remain bullish. They're not taking short positions on Apple. So they might do a sector rotation. They might be leaving Apple and technology and heading over to oil, or they might have left oil when oil was $85 a barrel. Now oil's what? 70, 71, 72, probably in that range. So as they're leaving, they're heading into technology. Now big tech is going up. Now here's a play for any trader. This would have worked for the entire last week. Thursday, Friday. I spoke about it on YouTube early, Thursday or Friday morning, right? Buying NVIDIA or AMD on the dips, call options, right? End of week, go out an extra week. NVIDIA dips. So when you actually find support on it, I don't know where it was on Friday. Maybe it was like 426, something like that. And then it went back to 434. I don't know where it ended, maybe 430. Who knows? The point is there's a strong rebound. As long as you give yourself the extra time to be right, you're not buying stock. You're buying call options. Maybe you're even buying a spread, right? So as it's going up, boom, you're buying the higher spread option. You're making the premium. You're looking for a certain range. You exit out, you take profit. Maybe you're buying the calls and selling the puts. There are so many ways to make money. Anyway, the point is, do not overtrade. That's another flaw of mine, right? I used to be successful 2-3 times a day. Why the hell was I entering a fourth trade? And I would have some terrible fourth trades and I'd ride them overnight and open up even further down. So the 3 successful trades I made in one day, based on the one trade that I rode into close and opened down the next day, screwed my account. I mean, I used to be like 12,000, then I would make 7, 5, 4. I would be up 12 on my next trade, and then all of a sudden I'm down 19. So up 12 to down 19, what am I going to do? Oh, I'm looking for the bounce. I'll hold overnight. I'll get back to even. I'll still make it from my 3 previous trades. No, never worked out that way. Always had an unhappy ending. All right, with that said, I'm here again to help teach you how to improve your trading. Journal everything. When you're making mistakes, you'll just read the journal. Like, how could I be so stupid? I do that so many times. I'm like, well, I'm watching this option. I'm saying, okay, it's at $75 per contract. It could go down to 58, which is the low on the day. That would be great entry because I do think the contract's going higher. But I would still have FOMO. I would buy it at 75, 68, 66. We could talk about my last entry of DraftKings on Friday, right? I think I bought it at $72. Then it went to 70. I bought some more at $66. I think it closed at 62. So I bought more at 66. Thought 70 was a good entry, and it closed at 62. Now I'm still going to be profitable in this trade. I've got DraftKings calls. They expire this week. I'm assuming I'll get out Monday, Tuesday. Who knows? We'll see how the week starts. But that was my final trade there. Okay, so let's talk about how we're going to improve your skills for the market today. All right, so we can look at technology, the NASDAQ. I like to share my screen. Okay, so you've got inflow 4, 5, 6, 7 out of the last 9 days. We can call this consolidation because they're still buying as it's going down. Inflow simply means that people are paying the ask to purchase the stock, to purchase the NASDAQ, to purchase whatever technology they're purchasing, meaning they want to be in. Oh, Tesla's at this point. We'll buy it right now. We want to be in Tesla. That's a bullish signal. Inflow, bullish signal. Even if the market's going lower, it's still a bullish signal. That's why I think we're going to revisit. I think tech's going to revisit its high, right? So once tech revisits its high, I think the SPY will be sitting at 442. I don't know when it's happening. And yes, any single occurrence in a given day, meaning the Fed speak or numbers come out or job numbers, it could totally change my opinion. But my opinion as it is, I'm a bear in a bull market right now. So I do think we're going back to 442. I think tech will continuously bought up. My trading strategy will be to find the busiest options. How do I find the best options to trade? Well, I go to Discord. What do I do on Discord? No, I don't go to my room first. Team Greatness. No, I don't go to his room either. I will go, yeah, those are the DraftKings options I bought. See, those are in my trades. But what will I do? I will look at the top flow. So I'll type in top. What will that tell me? That will tell me the most traded options. The most traded options. Amazon. I already mentioned last week, Amazon was bullish. I was looking for a pullback to 125. I think it closed at 130. The Russell, okay? Yes, people are buying safety with the VIX, Tesla. But if I want to be bullish, I'm going to be buying Meta on any dips. I'm not buying Apple or Rivian. I don't want to be in there. I'll be buying Tesla on dips. I'll be buying Amazon on dips. Okay? NVIDIA has been working on dips as well, although NVIDIA has turned bullish. I've heard people talking about Micron technology. Here you got Activision, and you've got some Chinese stocks. Now, Chinese stocks have been extremely beat up, so I don't even want to take a bearish position in this market. I'm a bear, but I want to remain bullish. So the first thing I do is I look at big flows, and it tells me that I probably want to play Tesla. Now you're saying, I don't have enough money to play Tesla, man. I only got $120. Well, the first thing I did is I told you guys to go out a week. So I'll just give you a for example before we continue. For example, I would look at Tesla. So let's just go, and I'm sorry, you'll have to do this with me, and it'll be on my phone because that's where most of my trading is. But when I'm successfully trading, I'm trading off my computer. I'm looking at the 1 minute, the 3 minute, the 5 minute. I make the trades from my phone because it's just easier for me. But when I actually look at my phone and I try and trade off my phone, it's so much easier doing it on your computer. So I'm looking at Tesla, and where did we close? We closed down after hours, 1.36%. I'm looking, that's pretty low. Again, we got a bounce on Friday. The bottom on Friday was 250, 280. So that tells me, okay, 253, 254. I would be happy at 253, 254. And that's where we are after hours. 253.11 as I shoot this video, 9:58 p.m. on Sunday night. However, it'll probably spike up pre-market. That's how Tesla's been. I want to look at inflow. Hopefully it's an inflow day. But I mentioned, okay, let's say you only have $120 in your account. How would I do this? Well, I could go out till Friday. Let me just see what kind of options we'd go out till Friday. $120. I'm looking at maybe the $280 calls. Yeah, that's a whole 10% away. They're $1.42. That's what they closed at, $1.42. Now, again, Tesla's opening down 1.36% as I shoot this Sunday night, just before 10 p.m. Now, I say to myself, okay, let's say the market's volatile, open. Let's say it actually drops. Maybe it turns red in the morning, something like that. These are 142. If I'm willing to pay 142 and I'm generally wrong by about 20%, let's say 145. If I'm wrong by 20%, that's 29 cents. 29 cents from 145 puts me at about 116. The fact that I suggested you might have $120 in your account, my trade for $116 would be these Tesla 280 calls that expire Friday. Now, what am I looking at? Okay, well, I'm looking at Tesla, and I look at where this option traded last week. We traded to a high of about $2. Well, that was a lot more, $2.50 on Friday. So I can say, okay, even Friday's high, $2.50. If I get in at $1.18 or $1.16, whatever I said, or $1.14, and the high was $2.50, I'm going to say, okay, I'm going to buy it. If I get the buy, as soon as I get the buy, I'm going to set the ask for just under 250, 245, 240. Let's just say 240. Okay. I'm still looking at about a 90% return. I need Tesla to go up, off a spike on Monday, maybe Tuesday. Of course, I'm going to reevaluate each of my positions, but I'm just giving you a for example. This is what I'm looking at. Now, if I look at Tesla on Friday, the options activity at 320, at a low of $1.31, there was a nice spike in volume. So if I actually get in at $1.14, $1.16, $1.18, and $1.31 on Friday at 3-something p.m. was great, value for somebody, okay? And I'm actually a bull in this market. Again, I guess we're a bullish market. I'm not a bull or a bear. I just think we're going to 442. I think sometime in July, the market's going to throw up on itself, and we're going to be back at 414. Something like that. So if you go 442 or 440 to 414, you're talking about 26 points. You're talking about 6.5%. Yeah, that'd be half of what some people are talking about 10%, 12%, 15% pullback. It's interesting. So again, when I make predictions like that, I like to look at these charts. So again, I'm looking at technology. I'm saying, okay, well, they're still buying technology, and I think we're going to revisit that high. What about the Dow? They've been selling the Dow like crazy. Okay, the Dow could be consolidating. Okay, yes, energy is taking a hard hit. You've got some material plays that took some hits. Okay, but again, there are institutions that have to remain bullish. So I've always been the guy like waiting for that market to drop. I'm not that guy anymore. I'm more about making money. So back to making money, and a quick lesson: you don't have to trade every day. You don't have to make 3 trades a day. You don't have to make 4 trades a day. You want to make 1 good trade a week? When I realized what I needed to live on to be an active trader, I just overtraded. But the same is true. I get greedy, whatever I'm doing. I always think there's more for me to make. And that was my problem when I was working on Wall Street. I did the same thing. There was never enough, which is why I left Wall Street. Everything changed about me. I became a person that I didn't like. I like myself now. I like being a great dad. If I can't trade a day because I'm being a great dad, shit, more power to me. I have a wonderful time with my kids, my family. I almost missed out on that opportunity. All right. So with that said, we'll talk about what else I see in the pictures. Let's see. The Treasury Department has replenished its account. We always hear about the Fed's balance sheet. Okay. Understand the Fed's repo, okay, which was at $3 trillion, is now closer to $2 trillion. So that's actually saving the market from the liquidity drain. If the repo rate, and you guys can Google this, if the repo rate was high and at all-time highs, like we were seeing towards the last year, towards what was it, the second quarter, third quarter of last year. You'll have to look that up. Repo rates went from 1.4 trillion to 1.7. I'm like, holy shit. Then they hit 2 trillion. People were talking about that. They were 2.1, 2.4. They hit 3 trillion. They've come down. So as they've come down, the Fed's balance sheet will keep declining, but the liquidity might not be pulled. Again, if repos hit a high pace any one day, and I'm going to say, okay, the market's going to be drained liquidity, I might change my stance. All right, what else? Last week's performance, the Dow was down 1.7%, snaps a 3-week win streak. S&P 1.4%, 5-week win streak. NASDAQ 1.4%, snaps an 8-week win streak. Russell 2.9%, snaps a 3-week win streak. So people are like, yeah, it's changing. The market's going to turn. Okay, what if they're wrong? What if the market doesn't just fall on its face? Okay, we'll all understand. If it does fall on its face, we'll see it happening. If the market continues down next week, 2%, 2%, 2%, then you'll discount this and be like, okay, you said the other option was the market's going to continue to go. But I don't think so. I think it's consolidation. Again, there's so much money on the sidelines and in the market that has to remain bullish. It's just a rotation. It's still consolidation. Some stocks ran. So I'm looking for stocks that pop, that are consolidating on lower volume, that I think will pop again. And I'll talk about those before the end of the video. Okay, so just stick with me. Again, that was the S&P, NASDAQ. Yeah, okay, so I had a couple of ways for you guys to make money, and this is towards the end of last week. So understand, if you think the market's consolidating and things are going to go higher, and you've got a Meta or something like that at 286, you're going to say to yourself, it could be 300 pretty soon. So me, on Friday, actually on Thursday, Meta was like 278. I'm saying, what are these 285 options going for? The 285 options that were $6 or 3.5% out of the money were so extremely cheap. They were 20 cents each. Now, again, I can't take credit for pulling the string on that because I didn't trade it. But they went from $20 each to $285 a contract. You're talking about a 1,400% return, or 14x your money, okay? So $100 becomes $1,400. So again, you don't have to trade every day. You have to find the right trade. What else? I was looking at Carvana, right? You want to take a bearish position. Again, Carvana was spiking on lower volume. What does that tell me? If volume comes back and the market was difficult, which it was towards the end of the last week, okay, Carvana could have came down. We've seen it move 20, 25% in a day to the upside. We've seen it move 13, 15% to the downside. So the $23 options, or even the $22.50 options, and it went under 22, it was at $25 to start the morning. $2 swing really quickly. But again, say you want to go against the market. If you were a bear, you said Carvana's overrated, just like Upstart or Affirm or something like that. Big movements. AI. Is AI consolidating at $30 or $32? Will it shoot back up to 46? Possibility if you want to be bullish AI, if you want to be bullish NVIDIA, if you want to be bullish AMD. Okay? But I'm talking about Carvana. So again, people said Carvana's a $1 stock, a $5 stock. It shot up from $22 all the way to 25. It was like actually 17 to 25, maybe even higher, 26. If you took the puts on Friday, just one trade, okay, or even late Thursday, you're talking about an $11 put position, $11 that turned into $1.80. So $11 into $180. You're talking about a 16.5x return. So again, I'm not suggesting anybody put all of their money. I'm just showing you what the possibilities are for patience. I made a posting over the weekend. If you're patient, it's going to improve your trading ability. It's going to make you a great trader. It might not. You could be patient as hell. You still might not get that light bulb moment and be a fabulous trader. However, if you are more patient on entry and exit, it probably will improve your skills. So even if you're a losing trader, you're not going to lose hundreds. You might lose tens of dollars instead of hundreds. If you lost thousands, you might only lose hundreds. If you lost only $100 or hundreds of dollars, you might actually turn profitable and make just a couple hundred. It's not going to flip you from being an absolute terrible trader to a great trader. What will flip you is paying attention to the market, understanding, and this is how I process my positions, okay? First, I say, what could happen in the market? Okay, it could rip up to 442 or it could drop down to 414. Okay, I got it. Now find stocks that make sense. If the market rips higher, I want to be in calls in this stock, this stock, this stock. Then I look at the stocks and I say, okay, if they have a red day, where can they go down to? Where would good entry be? First off, if your stock's having a red day, you don't want to enter until like 3:40 p.m., 3:45 p.m. Why? Because it's having a red day. It could fade and enter the worst part of the day. All right, so yeah, I mean, I already spoke about my DraftKings. Let's go back to Discord. I'll speak about my last position. Let's see if I can find it. So I'll go to Discord. I won't use the flow and algos, even though I generally use that. I will go to my last trades. Okay, got in DraftKings. The same DraftKings trade I bought in at $77. I sold at 100. Okay, so I already made profit on it of 33%. Okay, $23. Actually, it's about what, 31%. Now it was at $72 that I got in at. Okay, I wanted to sell at $95 or sell at a whole $100 and carry it over the weekend. Then it went down. I added more at $66. Again, it closed at $62 a contract. It closed. I'm red. About 10 contracts and 10 more contracts. I'm red by what? $4 times 10 is 40. And another $10 times 10 is $140. I'm red $140. But if this goes to $1 and I get out of $1 because I'd be happy with that exit strategy. All right. So I'm in at an average of 69 cents. It goes to $1. I'm going to make what? $620. I have 20 contracts. So that's my profit. That's my strategy. That's my exit. Will it go higher? Yes. I mean, on Friday, it spiked to 105. I got out at $1. It went right back down. So again, it's about having your exit strategy set, planning ahead. So if you like these lessons, again, I haven't asked you anything yet. Please thumbs up. Join me Tuesday morning. I will be live and I will answer your questions. I just wanted to talk about the market and what I'm kind of here doing. I'm not claiming to be the best trader, but I'm here trying to help educate. So if you need education, if you need help, if you like listening to me, if you like the way I process the market, please join Discord. Please join me on YouTube every morning. I mentioned this on Discord on Friday. Apple, large put writer. The October 20 puts, he's selling $4 million worth of premium at $175. So what does that mean? It means Apple has to be over $175 a share for those contracts to expire worthless, and for this gentleman or this company or this lady to bank $4.48 million. Okay. As long as Apple is still riding higher, and I think it's at all-time highs, and the market doesn't fade, let's say we see that 442. By October, Apple needs to remain. Now, of course, if this goes to $190 or Apple goes to $200 and it's looking bullish, he could buy these back for a fraction of the cost, probably like under $1 million. Bank $3.5 million. Apple reaches an all-time high June 31st, something to that extent. Doesn't mean someone's going to hold their position through October. All right, what else do we got? Let's see if we close anything out. Nope, just pictures of my daughter. Again, I love my family. Have a great time with them. I appreciate everybody joining me this morning. I will be live again Tuesday morning. Please, thumbs up, make a comment. If you have a question about a stock, ask it. I'll answer tomorrow morning. Have a great day. Be safe, stress-free.